So good morning, afternoon and evening, depending on which part of the world you're sitting in. My name is Simon Zadek. I'm the Executive Director of NatureFinance, and I'm super pleased to welcome you to the inaugural session of the Nature Investor Circle. Inevitably, we have people joining as I speak, but as we have a really full agenda, I'm just going to push on and people can catch up as they come online. So nature finance, nature investment, fashionable in many different ways, with obviously a very long and often difficult history. And in particular, over the last 3 or 4 years, we've seen an explosive interest by growing parts of the financial community to understand where nature fits into their overall investment decisions. Now, obviously, there's a truck of stuff that is happening on the risk side. And in fact, in a few days in New York, on the 18th of September at the New York Stock Exchange, the final disclosure recommendations of the Task Force for Nature-Related Financial Disclosure will be released as sort of a keystone, but one part of a broader ecosystem of standards and rules and policies that are beginning to emerge to shape the way in which financial markets think about and act on nature-related risks and opportunities. Now, for some of you on the call, nature and particularly biodiversity will be a long and deep topic that you've been engaged in for years, if not decades, and your interest will have existed for an extended period of time, and probably your knowledge on what you're looking for and how you can understand what you see may well be quite extensive. But there's no doubt that for most players, that is not the case. There is a growing interest in where nature fits into investment of many different kinds, from sovereign debt markets to impact investing, from large-scale asset management and infrastructure investment through to early-stage investments in startups. And in the main, what nature finance and its growing ecosystem of partners note, some of whom are on the call today and will be talking and presenting and discussing with you, is that there is a knowledge vacuum about the science itself for many, about ways in which nature can be thought about, measured, assessed, and related enterprise opportunities evaluated. For many who have been more active in the climate space over recent years, there's, if you like, a migration interest, but again, a need to understand more. We've had many family offices and other financial institutions coming to us over particularly the last couple of years going, we have a climate-related portfolio. We see that the nature part of it is really critical, but we're perhaps not quite at sea, but certainly at odds as to really how to think and build a systematic portfolio in this space. Also, who else is operating and what kinds of policies and regulations and standards and metrics are likely to emerge over the coming years that will influence decisions that we may make today because of the way in which they affect the viability, profitability, and impact of different enterprises that may come across our desks over the coming period. We are super interested as Nature Finance in helping to answer many of those questions, but we're absolutely clear that although Nature Finance has its own portfolio of work that we want to contribute, the real task is to curate a series of conversations that bring the best experts and practitioners from around the world to meet with other experts and practitioners, those who are actually making investments, to bring knowledge, exchange views, and learn together. And I think we can, as Nature Finance, contribute to making that conversation happen And the Nature Investor Circle is, if you like, the sort of branded framing within which we want that conversation to continue. Where could it go? Well, obviously, just informing, we hope, will be helpful and helpful to a growing number of actors who I hope will see the opportunity to learn more through us and through other participants in the Nature Investor Circle. But perhaps it goes further than that. You know, we think over time, partnerships may form between different players, some on the supply side, some actually on the enterprise side as well, perhaps common funds or collaborative investments in different ways. And then maybe there's a sort of a next level up as well. There is a raft, as I've said, of standards and regulations and policies emerging in the nature space, both in the real economy and the financial economy. But what actually makes sense? What is working? What is helpful? What do you, as practitioners in the market, really need in order to understand what's going on and really move money in the right direction? So perhaps that higher level opportunity is also not a lobbying voice, but a sort of clearer collective voice as to kind of what really should or could be happening in the broader enabling environment in order to make your lives easier in making smart, nature positive picks. As I say, this is the first session of the Nature Investor Circle, but by no means the last. I'm sure today in itself will be fun and exciting and hopefully really productive for everybody in different ways. And after the session, as you'll hear, we'll come back to you looking for your views, any feedback you may have, ways in which we can improve the way the Nature Investor Circle provides effectively service at a collective level to a growing number of investors that want to be involved in the area. So with that, I will step back, welcome you all, and pass the conch on to the next presenter. Thank you very much.
Hiba, I guess that is me. Thank you, Simon. I'm Martin Stuchtey. I am the founder of the Landbanking Group, to some of you better known through its platform called Ventler, and formerly of a company called Systemic. The Landbanking Group first is very grateful that we are able to talk to you for a few minutes to present our line of thought and what we do. And our vision is making nature a balance sheet grade and then increasingly fiduciary investable asset class. And our mission is to change through that the way we take land use decisions every day on every continent and square meter by square meter. Now, let me not tell you how we are losing nature, because you know that. Let me not talk to you about how nature, both marine and terrestrial, has in fact helped us to dampen our journey towards 420 ppm, but that these terrestrial and marine ecosystems are now exhausted, and we have an imperative to rebuild them. And let me also not tell you, because you know that, that we don't have a real path towards Paris or Montreal in the way we make land use decisions. Let me, in fact, sort of start with an oddity. It's evident that nature is critical infrastructure. We all know it. If we have to handle agricultural supply chains, there's no orange juice from the Mediterranean. There are beer companies going out of business for lack of hop. We can't import the herbs that we need into Europe. We don't have the water to cool our power plants. In California, interestingly, you can't get a home insurance anymore because the risk of forest fire is too high. We have pharma companies sort of struggling how to sort of get access to digital sequencing information. So I think it's quite evident that this is like any other infrastructure category, transportation, energy, social infrastructure, an infrastructure, but we can't reinvest into it. And that takes us to the first slide, Hiba. The only thing that we currently offer are instruments that are good, but they are limited. They are reflective of the technological opportunities, but also of the worldview that we had on this problem only a few years ago. And sort of here is a conversation, and I just sort of reconstructed that we had a few days ago with an investor who's not sort of part of this tribe, who actually isn't familiar with nature markets really, and sort of who asked me sort of what are the current nature instruments, for example, these carbon markets that you can offer us. And sort of, and if you tell them that, look, imagine a product that you have to fully pay up front. Imagine a product that where 100% of the default risk is with you. Imagine it where you can't actually reconstruct how it has been valued and what kind of parameters sort of have driven that valuation and how much substance is in that. Imagine a product where you don't have sort of an underlying that actually is mark to market all the time. And imagine one where you might have hidden liabilities that, for example, carbon starts crowding out biodiversity, which then actually turns into a major risk for you. And then sort of, and that's probably the biggest one here, imagine a product that is only of value to you if you have created harm in the first place. Now, she looked at me in surprise and said, yeah, that's a very funny product. Are there financial markets where you would actually trade that? Yeah, and the answer is yes, that's currently sort of our best idea to reinvest into critical infrastructure called nature. And so we have to, I think we owe it to each other jointly to push our envelope and think sort of what are the instruments and what is the financial infrastructure that we really need to invest in preservation equivalents and in improvement equivalents of nature. And we have to actually think beyond the logic of a compensation market and try to design it in the way an asset market would be designed. Next slide, Hiba. Where actually we have an ex post and not an ex ante design, where sort of we actually share the risks of delivery, where there's always sort of a clear, radically transparent view of what this claim is really about, and where there's a constant underlying that you're almost a biophysical representation, a biophysical twin of that contract that you have signed back in nature, and where there's safeguards built into it to make sure it's actually been driven by the right ecological outcomes. So that would be, in fact, the way an asset market would look at something that's of value. And another way to get into, or another door to get into that same room, is actually to have that conversation not with an investor, but to have it with a chartered accountant, which sometimes is fun and sometimes it isn't. They will tell you for nature investments actually to qualify as a balance sheet assets, they have to be identifiable. So there needs to be a way to recognize the value. Next slide. It has to be controllable contract. So it actually needs to be an asset, sort of a set of rights you can own. And thirdly, it has to have a positive economic value. That means there needs to be a market at which it can be traded. And that is sort of very much what has driven us when we started as a land banking group and when we designed Ventler, sort of which conveniently has been launched this week as an end-to-end digital platform for the management of nature assets. Was designed. And Jamie, would you actually give us a quick view how it works and who are the customers we work with?
Sure thing. Hopefully you guys can hear me. So as Martin said, for this paradigm shift to take place, what Landler is built to do, it's built on 3 pillars. The first pillar is what we call MRV for natural capital, and it is a set of structured MRV technologies that measure carbon, water, biodiversity, and soil on an outcome basis. So measuring purely when the uplift or the piece of conservation has taken place. What you can then do with such an integrated MRV system is build a set of natural capital accounts, which are the underlying twin back in nature of the investment that you've made. Such natural capital accounts can monitor basically the performance of carbon, water, biodiversity, and soil throughout time. So you always have a view of how your position in nature is developing as and when you make investments or as and when you don't. And the thing that then allows you to do with such a view is to start to structure performance-based contracts into nature. These are contracts that say, I will pay you upon delivery of the 100 tons of carbon, or on the uplift of biodiversity, or on the uplift of water holding capacity. And really, by tying these three things together, we think we can bring nature onto the balance sheet. And what that means we can do, if we jump to the next slide, and what that means in terms of actually a transaction infrastructure is, firstly, we think this whole system brings a massive amount of credibility and robustness to bilateral transactions. So we are able to actually set up a transaction for natural capital or for nature that lives outside of a traditional commodity contract. We think these contracts then are allowing buyers and sellers of ecosystem services to interact in a much more standardized and much more scalable and a much more robust way. And if we flick to the next slide, what that actually allows us to do thereafter, well, we've established now this kind of asset grade contract between a buyer and a seller of ecosystem service. We've built in the kind of robustness that really then allows a bank to come in and get involved and to be part of the risk sharing. This system then allows the buyer and the seller to interact with more trust, but also then allows the banks and the other financial institutions to invest into nature themselves and to play their critical role, we think, in scaling these investments. And by taking this step, by passing that test with the banks, we open ourselves up to lots of creative options, one of those being opening up to the wider capital markets. And this is where we jump to the final slide, where we can really start to build SPVs around specific investments. We can open this up to the wider capital markets. So we could have a system where investors, companies, banks are all able to invest into nature, are all able to share the risk of these investments, are all able to have complete transparency over the performance of those investments over time. But also they can do it in an architecture and in a language that is familiar to them, because it is all built on asset grade contracts. And I think that's why, to go back to the kind of framing for this session of MRV for biodiversity and MRV for nature, is that this is why MRV is so important. Our ability to measure outcomes of biodiversity and other natural capital indicators, and our ability to understand the interaction between those indicators, is the basis for the quality of those contracts and is the basis for such a system. So then very briefly on the last slide, and then we'll move on. Where are we as a company right now, to try and bring this a bit more back into the real world? As we're kind of applying these ideas, firstly, we are working in productive landscapes, so with the food, cosmetic, fiber, and agricultural companies. And we are helping them basically to invest into their own value chains to improve that biodiversity, increase supply chain resiliency, reduce scope 3 emissions, and meet upcoming compliance requirements. Secondly, we are working in protected landscapes, basically working with conservation entities in Africa to structure outcome-based financing mechanisms for conservation. And the third and really exciting thing that we're doing is combining these two approaches such that we start to think about investing into nature at a landscape level. And we're doing that in projects where we can raise capital from a bunch of different private market actors, deploy it through a standardized system that we're building, and have those investments actually made on the ground in a series of very different landscapes, or a very different productive or protected landscapes, all under the same financial product. So I hope that kind of gives a bit of an overview of where we are and how that theory and view of the world translates into a product. And maybe what I'll finish is by saying, Martin and I were reflecting on the role of investors in this community. And then I was thinking from my own perspective, having worked as an early stage investor and now having worked for a company that's raised money from an early stage investor, we really think that the emphasis among the early stage investors that have a responsibility to scale the company, to help scale the companies that form the basis of this market, need to really move from a competitive mindset to a collaborative mindset. And I mean that kind of at every level. We don't think that MRV for nature and MRV for biodiversity is going to be a winner takes all space. We think it needs lots and lots of companies to be funded, lots and lots of technologies to be funded, and that requires moving away from competitive maps on slides to real collaboration. And then secondly, collaboration amongst investors, right? It's kind of going back to what Simon said at the very start. We all are responsible for lifting each other in this journey, such that we get these investments right and we scale this market correctly. And so I think that's that's where our view of the world meets the nature investor circle, and why we're very happy to be involved. So I will pause there, hopefully not too much over time, and pass back to Simon or Hiba.
All right, so I guess it's me. Shall I just jump into it?
Yes.
Yes. All right, cool. Thank you. Hi, everyone. Can't see you, but it's nice to be here with you. Today, I'm going to be speaking about our work at the Crowther Lab in ETH University in Zurich, where we are developing SEED, which is a core measurement system for the state of biodiversity anywhere on the planet. Very quickly about the lab. Yeah, you can go back to it, doesn't really matter. We are about 40 scientists and ecologists studying the relationship between biodiversity, climate change on a global scale. And a lot of our research has actually been influencing global climate policy and restoration schemes around the world. So SEED is going to be a spin-off of the lab, and we've created about a year ago, building off around a decade of the lab's work. Next slide, thank you. So this is what we exist to address. This is why we're here. I don't think in this kind of call I have to reiterate the state of affairs that we're in. And our central concern is biodiversity loss, because if nature collapses, we reach a whole series of planetary tipping points and cascades that affect pretty much everything that you may care about. Next slide. So 100% of the world's GDP is dependent on nature, not 50, not 75. All of our economy is based on what we can call natural capital biodiversity. Das Gupta, I'm sure some of you read this report that came out, I think it was 2-3 years ago now, but really seminal report showing that our economies are embedded in nature and not external to it. Can you click through? So just in case you're new to biodiversity, there's provisioning services like food, fuel, fiber, regulating, and also cultural services, aesthetic, recreational, educational. And to date, our political and economic systems have very much failed to account for this incredible dependence that we have on the living world. So I love this quote, right? When people talk, and Martin referred to this as well, natural capital not being assigned a value, we put that price at zero and sometimes even negative if you think of subsidies. So we have underpriced and underfunded nature on a vast scale. And the central reason why SEED exists is to bridge that financing gap with the best available science and to change the way that biodiversity is factored in and accounted for, both in economic and political systems. Next slide. So a little bit about the wave that we're riding here. I think everyone on this call, just in case this is a bit new to you, there is a massive architecture emerging to value and fund biodiversity. NatureFinance came out with a report valuing nature markets about 10 trillion per year. 170 trillion has been committed by banks and asset managers. Some state that the market size for credits will be 4 times that of carbon. And obviously we had Montreal in December last year, where governments committed to mobilize at least 200 billion in domestic and international funding. So this undervaluing is quickly changing. Next slide, please. And also very quickly on the framework, because this is obviously where we come in with seeds. There is a target to protect and restore 30% of the Earth's surface, land and oceans by 2030. And corporates will now be required to disclose their risks, impacts, and dependencies on nature. So that's all great, right? And that's a sort of quick fly through the context that let us create SEED. Next slide. And there's both a great challenge and I think something incredibly concerning here, which is this emerging landscape of frameworks and standards and financing will need high integrity biodiversity data. If you will, you kind of need a gold reference standard for measurement and tracking of these commitments. And so in the absence of such a thing, we are existing to create SEED, which is the world's most comprehensive index or measurement of biodiversity to enable all of the previous groups I referenced to measure, monitor, and essentially fund biodiversity at scale. We do believe it is the most rigorous assessment of the state of nature. I'll get into a little bit of details now because I think that's important. So you may have read or come across other tools, but the problem lies in this. So we account for all scales of life's complexity at a genetic, species, and ecosystem level. Many of the existing, sorry, can you go stay on that side? Thank you. Many of the existing tools are either static or incredibly unscalable. They can be very costly for local communities to use. And sometimes they hardly include any actual real data layers of pure biodiversity. So they're reductionist. And obviously, when you look at a few facets of biodiversity and you miss out on entire groups like fungi or microbes that form the building blocks of life, you will end up creating perverse incentive structures and probably funding the wrong interventions in landscapes. Next slide, thank you. This is a little bit geeky, but I think it's cool. This is the kind of tree of life that we all exist inside of. The one on the right is more complex, but full. And just click again. So you'll see that animals and plants, or eukaryotes, which is what most other indices measure, are a very small part of what constitutes biodiversity. And so we need to include this variation across other scales. Next slide. To sort of illustrate this, you'll see that if you click, sorry, this clicking thing is, so if you measure just above ground biodiversity, you get a certain type of map. Click. And that gives you a species number very high in the latitudes, for example. But now if you go to the next slides and you do the same thing, if you look at below ground, microbes and fungi, you end up getting a completely different map. And so depending on the variable you choose, you'll end up calling that biodiversity. And so what we exist to do with seeds is to reunite all of the existing maps and information that's out there, which we call biocomplexity, because the true value of nature lies in that complexity, the infinite connections and interactions between all of the components of the system that exist at 3 levels. So genetic, species, and ecosystem variations. So very quickly, I'll explain how the science kind of works. And at the end, I have a QR code that you can go through to see our first pre-published paper. So this is just a sampling. But essentially, what we do is we take these global maps. So thousands of academics from around the world have developed global maps for each of these levels of variation for any region on Earth. So in this example, you may see that this part of this is Costa Rica. It has 90% connectivity at the ecosystem level. And then click next, we have data on the species level, and then data on the interspecies genetic diversity level. And what we do, next slide, is in a very technical thing called a dimensionality reduction approach, we collapse all those maps together, hundreds of variables, into a single measure of biodiversity. And what this means is that our method is interoperable. We can ingest any new map or data that comes online that is representing biodiversity. And then, perfect. And it kind of gives us this. So this is the way we're envisaging it for now. You would essentially receive a score for how you are in each of those 9 dimensions. And as you can see, there is a reference ecosystem, which is an ecosystem in its minimally disturbed state. So that's the reference. And then your polygon or area of interest. And you can see how you may be faring on a genetic, species, or ecosystem level across these different variables. And so this is our way of trying to create a simple value for obviously something that's incredibly complex. And what's really cool about this is it'll quantify aspects of biodiversity that have never been captured before. And then if we associate this with remotely sensed data, you can get a sense of change over time. So, how are we doing? How are we improving? Which obviously is important for the markets that that have been referred to earlier in the call. Next slide. So let's talk about markets, because this is NatureFinance. What are the uses of this tool? We've spoken about them already a bit, but you may be a corporation, now mandatorily obliged to disclose your impacts, risks, and dependencies. A financial institution, trying to understand the impact of your portfolio. Or a government trying to make sustainably linked sovereign debt. NatureFinance is doing really cool work on that. Or tracking progress. And of course, biocredits and markets. And we're really excited to be partnering with NatureFinance to accelerate the market adoption and advocacy of seed, specifically in this market area of our work. Last but not least, I'm going to share one quick case study that we are doing with a major food and agricultural corporation, where we'll be measuring the biocomplexity, or the state of nature, of their coffee and cocoa global supply chains. And what we're doing with them, you can maybe read on the bottom, but essentially we are determining which regenerative agricultural practices deliver the best benefits for biodiversity, yield, and farmer livelihoods. So we quantify the rating of their sites, we monitor the regenerative nature of their sites over time, And then we can compare that to benchmarks across the same region. So this gives incredibly useful information as to what they should prioritize and how and which practices are working. And in a next stage, we'll actually be collating emerging technologies like eDNA, bioacoustics, and drones. I think I have time to speak about this. This is a partner spin-off of the lab called Restore. It's the world's largest network of global restoration sites around the world. It's free, open source, ecological information for any polygon on the planet. Restore will be one of the platforms that hosts our biocomplexity layer with seed when it launches. But essentially, this is connecting with real practitioners on the ground. So it doesn't just remain a sort of intellectual tool inside of academia, but through these kinds of partnerships with hundreds of thousands of farmers that exist with Restore, we're also piloting seeds to understand how it can be useful. So that's a quick run through the science. If you want to QR code us, and if you're the kind of person who enjoys reading long science papers, then have fun. Thank you very much.
Great, thank you, Alexa, and handing over to Tim.
Right, hello everybody, I'm Tim Coles. I've spent 40 years working on monitoring biodiversity around the world, the last 25 years running international teams of scientists in lots of different ecosystems and publishing. The teams have published nearly 650 papers. So if I was in the situation of trying to look to see what my biodiversity footprint was, I would go to seed. I think it's the best technique there is around there for identifying where your priorities are. And if I wanted to trade biodiversity along with other things, I'd probably look at the land bank, because they've really cracked the system of how you develop these contracts and so forth. But what I want to talk about is something a little bit basic. Next slide, please. Is what is a unit of biodiversity change? Because that's the key bit that we have to understand. We all know that for climate change, a unit of change is a ton of carbon dioxide equivalent. But what's the equivalent for biodiversity? Because without that, you're really stuck. You do need to define what that is. And back in 2021, we organized a massive consultation group with lots of organizations around the world to start developing an approach. And the approach we started with was to use the Consumer Price Index, which is basically a basket of goods and services that every country prices up every year to calculate their inflation. And we compare those inflation rates around the world. But every country's got a completely different basket of goods and services, quite rightly, because that's what they're buying. So if you can quantify international financial criteria like that, why can't you do the same for conservation? Why can't you have a basket of metrics that reflect the conservation objectives of what you're trying to do? So if you're trying to protect an Indonesian coral reef from bomb fishing and cyanide fishing, then you look at things like rugosity, how many holes, nooks and crannies, coral cover, how many species of herbivorous and abundance of herbivorous fish, species richness and abundance of piscivorous fish, and species. But now apply that to a lowland farm in England, and not one of those metrics work, because there you're looking at things like soil invertebrates and higher plants and so forth. So how do you actually measure this on the ground? And this is where, let's start with breeding birds at a site. You're going to end up with a list of species that you've got there, but not all species are the same value. Some are much more important than others because they're massively declining or they're very rare in the first place. And so you have an importance scale from 1 to 5, 5 being the rarest or the red listed species, and 1 being the common species. So each species is allocated on that scale. But when you come back, say 2 or 3 years later and re-measure everything, you're not just looking for a change in species richness. I mean, it'd be great if you got a couple more species, but what you're really looking for is a change in the abundance of those that were already there. And so when we hear about 70% of biodiversity being lost in the world, what we're talking about is 70% of populations have declined. And so what we're trying to do is to replace that. And so you have a relative abundance figure, which scores 1 to 5, 1 being the least common, 5 being the most common for that species. And you multiply your abundance by your importance scores for, say, each species of bird, add them up, and you've got an overall figure for birds, breeding birds at that site. But at that site, you've also done soil invertebrates, higher plants, total arthropods, minus butterflies, etc. Each of those will have changed by a different percentage over time. And so you take the median value to reflect the overall improvement, multiply that by the number of hectares, and that's the units of biodiversity gain that you've achieved in that site. Now, next slide, please. Now, that has the massive advantage. Next slide, yeah, thank you. Is that you can actually either just stop at that stage and say, okay, we've got a 30% increase in biodiversity across 1,000 hectares, or you can issue it as credits by going to something like a blockchain or to a traditional certification body and issuing 80% of that uplift, because you have to keep 20% for your buffer. The other 80% get issued, and you can issue those then as credits and trade those. Now, the advantage of this system is it works everywhere. It doesn't matter which ecoregion you're talking about, from coral reefs to deserts, because it's a percentage uplift from the baseline. You can define a unit of biodiversity, which I'll explain in a few moments, and you can get it independently verified, and it uses the same structures for carbon. And you have two types of credits. You can either measure increase in biodiversity over time, which is fantastic, or you can do, if you've got a very important wildlife site that's under threat, and you're potentially going to lose biodiversity, you can measure the biodiversity at that site, compare it to what it will become unless you do something about it. And that's the difference that you're trying to protect. So let's say it's 1,000 units and you measure those, you get credits issued after you remeasure, let's say 2 or 3 years down the road, and you've maintained your biodiversity in your site. So you get, let's say 3 years worth out of a 25-year project of those 1,000 credits issued. Next slide, please. So this gives us the definition of a unit of biodiversity change. It's a 1% gain per hectare in the median value of a basket of taxa, so that's a group of species, that encompass the conservation objectives of the site. So you can stop at that stage. You can have that independently verified and say, look, we've got this 20% gain over 2,000 hectares, or you can move on to issue it as biodiversity credits. Next slide, please. So in order to do that, you really need independent validation and verification of claims. Now, academic peer review is used for an entire industry of publication of scientific literature. Why isn't it used for doing something like this? Because this is what is needed. You need academic peer review to, when you have a claim for a 20% uplift, what you're going to get are gigabytes worth of data that are presented to academics. And the idea is that they can then go through that and they can either verify or deny those claims. And this organization is called the Biodiversity Futures Initiative, and it's been funded now to get set up and have an international team of leading scientists on different taxa, different ecoregions, and they can then provide this independent verification. And it's a 2-stage review. So before you start on doing your measurements, then you can have a stage 1 review, which costs £2,000. You submit what you're proposing to do, what basket of metrics you're proposing to use, the methodologies, the sampling strategy, and they will then verify that that is appropriate in order for you to go ahead with your investment in terms of monitoring change over time. And then once you've monitored change over time, you come back now in 2 or 3 years down the road, you think you've got an increase now. Let's say you've got an increase of 50%. Over your baseline in those metrics. You can have a stage 2 review from this independent academic group, and the advantage of that is that they will verify whether you have got that percentage uplift or not. Once you've got that, you can either stop at that stage or move on to the next stage and issue those credits. And the advantage of this is that you've removed that link that you have in carbon certification bodies where they measure, they verify basically their own methodologies and then issue credits based on how successful you are. And in fact, as we saw in the recent press articles about avoided loss projects, there have been massive overissuance of credits. And that's because certification bodies, to a large extent, are dependent on the income that comes from how many credits are issued. This way, you have a separate body that actually identifies the claim, independent who issues it. So they have no financial benefit in overestimating it. Next slide, please. So how do you use these? Well, you can stack them with carbon and biodiversity. What's the additionality? Well, we always work on financial reasons alone. If you can fund a project entirely from carbon, then do it from carbon. You don't need biodiversity. But many projects you can't do from that. If you want to start bringing in native forest restoration or marine site restoration, then you need to add in biodiversity credits, or else the finances simply don't stack up. And if you can't do a project at all without biodiversity credits, but adding it in, you can do it. That's your additionality. Next slide, please. And how are we using it in RePlanet? Well, pretty well in every case, we're quantifying both carbon and biodiversity and selling them together. They can either be bundled together and sold as a single unit or sold separately. A lot of our work's in mangrove restoration work, but that's about 90% carbon income and 10% biodiversity. Once you move to native forest restoration, which is what we're doing in a series of Central American countries, particularly riparian forest, then that's about 50% income from carbon and 50% from biodiversity. You go to an open sea marine reserve, and don't forget every man and his dog is currently drawing lines on a map at the moment to ensure that their country has got 30% protected. And this is but it's easy to draw your lines. How do you fund it? Well, this is a way, biodiversity credits, in which you can fund the protection of your marine reserve. And what we are doing is having a series of investors that come in at early stage of a project. They invest maybe 2 to 3 million to get the project started, so it's funded ahead of the whole process. They get their investment back in 5 to 7 years and have an IRR of 15 to 18%. And we have 25 projects now around the world being developed in these different categories, and at least 10 more organizations around the world using this same system. Thank you.
Great, thank you, Tim. And I'm now handing over to Patty at Silverstrand.
Thank you, Hiba. Hi, everyone. My name is Patty, and I lead the impact investments at Silverstrand. Silverstrand is a single family office based in Singapore. And our mission is to be able to protect and restore biodiversity, both on land and ocean. Can we go to the next slide? Yeah, so sorry, next slide. The way that we look at investments in nature and biodiversity, we sort of bucket them into like 3 categories, or I think one very much aligned with the Landbanking Groups and seeds. The fact that nature today has 0 value in our economic system. So we focus on, creating or enabling that ecosystem and supporting the transparency of being able to measure, report, and verify the value of it. The second, I guess, larger bucket is around protecting. Here, I mean, these are some of the examples. We're looking at like alternative materials to avoid further deterioration of nature, avoiding wildfire loss, disasters, and also pollution in general, and restoring. Finally, whereby we look a lot at regenerative agriculture, which is where we started our journey, and aquaculture now as well, and reforestation, agroforestry, and marine restoration. So we are a fairly young organization. We were set up in 2019, just before COVID. Even though we're based in Singapore, we have a global mandate and support companies from seed to growth stage. When we first started, we mainly looked at direct investments. There weren't that many sort of funds that we found that were aligned with our mission. But I think, 4 years in, we do find more opportunities now. And I think that our sort of perspective has also probably developed to a certain degree. I think that being a family office, we have the privilege of being able to, deploy or have more flexibility in terms of our return expectations, and also being able to deploy different types of capital, but all working towards the same sort of mission and looking at it at a more systems change level. Next slide, please. So yeah, these are sort of some of the examples of our portfolio. I think these probably are more towards the first bucket of MRV, transparency, and yeah, measurement. Next slide, please. These are more, I guess, at a fund level, are yeah, more recent investments that we've made. And the next slide, and the last more like catalytic capital is yeah, we're also quite engaged with. So last year we set up a biodiversity accelerator here in Singapore. This is our, yeah, we just recently kicked off the second cohort here, and this year's like main focus was around MRV solutions as well. We also try to yeah, kind of just, this is something that we started last year, looking also more at blended opportunities. Another big piece that at least here in the Asian ecosystem we find is that human capital is also a big gap. Yeah, there aren't that many, I guess, readily available, you know, people that can maneuver and understand both from a science perspective, but also from a market perspective. So yeah, we also have some scholarships and kind of also support research and yeah, evidence. And yeah, I think, you know, my presentation is quite brief today. I'm happy to answer any questions, but one of the main learnings, I think, the last few years has been that we, you know, we're very, I guess, grateful and very privileged to be able to, you know, support and these type of opportunities. But having said that, I think that the gap, we also realize that the gap is really large, and that I guess us alone, you know, is we're not able to address this. So yeah, I think just echoing a little bit what the other panelists said, very open to collaboration and co-investment opportunities. Thank you.
Great, thank you, Patty. And so I'm Hiba Larsen, and I'm a principal at NatureFinance, overseeing our investment platform. And I would just like to say a big thank you to all the presenters. I think you've provided us with quite a big range of perspectives and insights of the opportunities and challenges in this space. So we're now going to kick off with our Q&A session. And I know there's quite a few questions to answer with limited time. So I would ask all of the panelists to keep their answers fairly brief, to 2 or 3 minutes. And I have the pleasure of having Kevin Webb, who's the co-founder and managing director of Superorganism, joining me first. And he's also one of the founding members of our Nature Investor Circle. So let's see if we can get Kevin on camera. There you are. Hi, Kevin. Great. So you're a fund manager who's really at the forefront when it comes to biodiversity related VC investment. And I was just wondering if you could give us sort of the inside scoop of how you approach this exciting space.
Thank you so much. It's really an honor to be here with so many friends on this panel. Yeah, so we're Superorganism, and we're trying to do something that makes us a little bit weird in both the venture capital and the conservation spaces. We're trying to be a biodiversity-focused venture firm, early stage, and as far as we know, it hasn't particularly been done before. Our approach is really holistic. So our view is that nature cuts across the economy just like climate does, and that gives us a very big, broad mandate in order to deliver real outcomes to companies that are generating revenue and also providing benefits to ecosystems at scale. We focus in three big areas where we think there are opportunities today. So bucket one, anything that touches extinction drivers. So things pollution, invasive species, habitat loss, overexploitation, where these kinds of businesses run up against existing industries and they help them transition or they outcompete them through new, better, more sustainable approaches, we get excited. We also do a lot at the overlap between climate and biodiversity. So nature-based solutions are an incredible approach for at least a bridging strategy for dealing with carbon dioxide. It's also great from an adaptation perspective. And we look at things like soil, wildfire, water from both the nature and a climate lens. I just froze on my side. Can you hear me still?
Yes, we can.
Okay, great. Yeah, and then we also look for enabling technologies. So as many people on this call know, conservationists are incredible adopters of early technology. So we look at the next generation of AI, satellites, genomics with a lens to how can this be helpful to the people who are doing the world's most important work. So that's high level where we focus. And then in terms of how we're approaching this, we think that the typical Silicon Valley attitude of move fast and break things doesn't really apply so well when companies are butting up against nature. And so we're trying to take the best of that ambition that startups can have, but also factor in the expertise that conservationists have, right? The access to land, access to stakeholders, lived experience, thoughtfulness about how does this look in 5, 10, 20 years, 100 years. And so that's us at a high level.
Great. Sounds very, very exciting. And I was wondering, because you mentioned in terms of emerging technologies, would you be able to share some of the sort of latest and greatest innovations that you see at the moment?
Oh man, it's really exciting. Like if I step back, what I think is special about this moment is that we're finally developing technologies that I think start to approach the complexity of nature. We're still miles away from it, but we've got declining compute costs, so we're able to start modeling what ecosystems actually can look like. We've got declining genomics cost, and so we're able to sequence not just individual species, but entire populations, and we can start managing that, right? We've spent a lot of time commoditizing nature and plucking out species that were inconvenient and just simplifying things down to what could fit into our machinery. With robotics, with AI, with everything else, I think we could start working with nature as it is in a much smarter, more deliberate way. And there are a lot of startups that we're working with that are trying to do similar things. So we just committed to invest in Fungo, for example, which is taking advantage of intact mycorrhizal networks in order to accelerate tree growth. It happens naturally in intact forests, and they're helping foresters to be able to accelerate tree growth, both for a carbon and a timber perspective.
Great, thank you so much. I'm now going to turn to Paddy. Thank you so much for sharing your insights on your strategy. And you obviously have great experience seeing sort of the highs and lows of investing in biodiversity. I was just wondering if you could share some of the key considerations in terms of investors looking to balance risk and return in making these type of investments.
Yeah, I mean, I think here in Asia, at least, in general, there is more interest in impact investing. And, as I mentioned, we're also trying to, I guess, advocate or get others to come on board. But yeah, first and foremost, they're looking for returns. So I would say that for those type of, I guess, investors, I think the nature tech, so sort of technology enabled, probably can provide more of that, potential upside. But I think for us, and I guess this year, with the focus also at the biodiversity accelerator level, being very focused on MRV solutions. That's kind of what we're looking for, I guess, this year. However, I think in our kind of, I guess, opinion, to be holistic, not, I guess not all tech-enabled solutions are the answer to the problems that we need to address. So I do think that the sector needs a lot of catalytic capital as well, and sort of like blended structures, and that will hopefully enable then, the growth of the ecosystem, and then deliver, I guess, more market type of returns. So yeah, I think, and that's kind of where we try to play sort of, blend or try to use different stacks of capital.
Can I ask you just that?
Hopefully I answered your question.
Yes, you did. And I'm just curious, just in terms of the sort of time perspective as well, do you feel that one has to adjust it to sort of be more conducive to these type of investments? Or do you think if you have a VC strategy, you could still find investment opportunities with a certain level of return within a decent time frame? Or do you encourage investors to have a much longer time perspective when it comes to these type of investments?
Yeah, I think it really depends on the opportunity. But for us, I think we do go in with a more sort of patient outlook. So, but I guess it's probably similar to Kevin also, I mean, it's a 10-year fund. So, in that sense, the reality is that a lot of, these investment opportunities are very early. There hasn't been a market for it. So, therefore, I do think that there is some time needed for harvesting. Having said that, we also, just recently got out an investment. I think it was in my slides, called Vents, and that was quite surprising. So I think it really depends.
Great, thank you, Patty. And I'm going to turn to Tim now, and you're one of the leading voices in the biodiversity credit space, and we're at NatureFinance huge fans of the work that you do. And I was just wondering, as this space is emerging, what advice would you provide for investors looking in this space, just in terms of looking at the different stack of benefits when it comes to biodiversity credits?
Okay, well, the advantage of biodiversity credits is it allows you to start restoring natural ecosystems, which you can't just do with carbon. So one of the sort of big problems we have in the world is too much deforestation, too much small-scale agriculture, which is often not very productive at all. And what can be done there is to reforest riparian strips 200 meters either side of watercourses, which then allows, and you can do that with native forest, and you can do that with carbon and biodiversity credits stacked together at below market rates. And that allows you to then really scale reforestation. And it gives the farmers an advantage. They have a financial benefit from doing this reforestation as well. But also, I think, look at marine reserves. How do you fund 130,000 hectare marine reserve? It's a line on a map. You've got to go around and patrol it. That costs money. And monitoring. Well, biodiversity credits are the perfect way of doing that. If you can, I'm thinking of one site in Belize, which used to have a fantastic aggregation of Nassau grouper. And we know that because it was on Blue Planet. And the cameraman who filmed that actually works with us. And he went back there and he said, look, it's terrible. We're down to just a handful of fish. Well, just doubling that population would give you 1.3 million credits. 10% increase will give you 1.3 million credits. Doubling it will give you 13 million credits for this site. You could sell those at $1 a piece, and you would be restoring an ecosystem and making a huge difference. So we see it as a way of restoring natural ecosystems.
And how do you view, because there's obviously been a lot of controversy when it comes to carbon market. So how do you assess sort of the flow through to where the capital is actually needed, and how one sort of avoids with large sort of sums of capital being stuck along the way?
Yeah, it's a pity, but unfortunately, avoided loss projects have assumptions, and they're always open to being challenged. It's far better as an investor to look at restoration type projects, like basically removals or uplift for carbon and biodiversity respectively, and they get a better price anyway for those. And the other situation I think we should try and avoid is having certification where the certifying body is rewarded by the more credits they give out. I think you do need to have that independent academic review system in the middle to stop that sort of situation recurring.
Thank you, Tim. So on that note, I wanted to invite Alexa, and first of all, thanking you. I think it's just so fascinating how you've created such an elegant solution to quite a complex topic. And I was just wondering, because we've heard now with all the types of emerging technologies and obviously research is constantly evolving, how do you ensure that seed maintains sort of its credibility and relevance over time?
Yeah, look, I think it's a very good question, especially, Tim will tell you as well, academics rarely ever agree on anything, right? So in terms of relevance, I would say that the interoperability aspect is key, because we can ingest whatever data sets emerge from any academic or other type of institution, and we kind of become a clearinghouse for things that are otherwise live and die in the halls of academia. That means that we're constantly ingesting all the new approaches, all the new data, and we're updating it, which, as far as I'm aware, many of the other metrics out there don't have that built into their architecture. So that's kind of on the relevance piece. And then it's partnerships like the one with NatureFinance and others where we actually need to understand what the market wants. So the way that academia would normally build a tool like this is sort of build a perfect biodiversity tool, launch it in 3 years. And as you guys know, we're building it as we're doing the pilots. We're building it with our corporate partners, with our government partners, with the bio credit groups we're working with, to ensure that what we're building is suitable for the kind of very different use cases that all need something a little bit different from us. And then in terms of the credibility, it's a peer review process, right? So after this preprint, we have, the method will be out there. People can comment on it, pick it apart. You register for an ISO, so you register for a sort of standardization protocol. So there's steps whereby, you kind of follow what happened in other markets similarly.
No, I think it's very fascinating, and I'm looking forward to seeing the sort of wider market adoption by financial institutions and corporate. So thank you for sharing that answer. And finally, of our questions, and then we're going to open up for the broader Q&A. Jamie, I've saved a very big question for you. And I just have to say, I really like what you said in terms of collaboration, and it feels like sort of it's been echoed throughout all of the presentations, just seeing the challenges we're facing. It feels like that's the critical element. And we're obviously, the topic of this is, how to quantify biodiversity. And I was just wondering if you could share, and I know we don't have a lot of time left, but in terms of being on the critical side of things, what do you think are the risks and potential unintended consequences of quantifying and valuing nature?
This is a big question, I guess, and it depends how philosophical you want to get and how long you have for as an answer. I think it's a really critical question. I think in the longer term, I think ultimately humanity probably moves to a value system where we value nature in more than just financial terms. I think in the short term, we have to start by valuing nature in financial terms, and then we have to deal with all the risks that imposes. So I think the kind of the landscape that I see right now is that businesses and investors are kind of in a position where they feel that they need to do more to invest into nature, and it's maybe driven by the risks that they face from supply chain insecurity or compliance requirements maybe looming. but they're nervous. They're not really sure how to act. Firstly, because it's hard, it's complex, and companies don't have the tool to kind of deal with the complexity of it. But secondly, because they're scared of greenwashing, right? They're scared that if they take that first step into somewhat of an unknown arena, they enter into that spotlight, and it doesn't work, that the backlash is going to be very, very severe. So having said that, I kind of think that the biggest risk of all of this is not doing anything. To my mind, not changing and keeping business as usual is by far the biggest risk that we face. And to not do something is, is kind of what I would want us to avoid. So the question is, how do you get out of that paralysis of not wanting to take the first step, but knowing we need to? And I think, firstly, maybe one of the risks is that as we start to value nature more and more, and we kind of uncover the immense value that we do have in nature, we end up in a world that is over commoditized. And that potentially leads you into kind of lots of social justice issues, right? That maybe it leads to the exploitation of the local communities that steward our most valuable natural assets. So I think social justice has to be one of the core pillars of any investment into nature, and governance is a massive part of that. And therefore, I'd probably point to the work of NatureFinance and Replanet in ensuring governance structures for market mechanisms. I guess maybe another unintended consequence could be, I don't know what you'd call it, maybe selective valuation. We suddenly start to value nature, but we only value it for the things that we can most easily monetize. So we're talking about ecosystem services primarily here, and we maybe make decisions that over-index on ecosystem services at the expense of kind of the more intrinsic or spiritual value that natural assets provide us. So I think I'm not sure quite what the answer is there, but I think that's potentially one risk. And then I think maybe the biggest risk is doing all of this in a way that's not scientifically robust, in a way that basically channels money to indicators or to outcomes that we didn't intend. So I think building a system that is scientifically robust, such that we don't either over-index on one indicator and then kind of prioritize carbon over water and biodiversity. I think that's also a bit of a risk. And I guess maybe the combination of that governance and scientific question is, can you build a system that accounts for all of these things, but is affordable? Can we combine all these technologies and these market infrastructure and all these market mechanisms in a way that actually allows a business or an investor to take part in these markets in a way that makes financial sense to them? And so I think that's probably the biggest question that we, as builders of this community, kind of have to answer. So I don't know if that quite answers the question, but I guess I would maybe underline the keenness of scientific, robust approaches in this market, and keeping social justice as a core pillar of any investment into nature.
No, thank you. I think that was an excellent answer, and I know also that Simon will probably also chime in, because this is a topic of interest. Simon, are you?
Yeah, thanks, Siba. I think Jamie has marked out the territory in exactly the right way. I would just perhaps embroider slightly on his tapestry. Partly, all investors will be pushed towards monetizing nature through regulations, disclosure standards, and so on. So there's a sort of piece of this that, the system has to move as a whole. And when, as we saw 10 days ago, the network for central banks on greening the financial system, so 120 central banks and financial supervisors, have kind of just announced a sort of more ambitious play in the nature space. We can see that it's, not necessarily for sort of positive nature reasons. Through a nature risk lens, this stuff is going to become more and more relevant, and a matter of requirement as much as a matter of choice. Then I would add, beyond that sort of compliance floor, which is going up all the time, I would add that, emphasizing Jamie's point, there are significant risks of unequal outcomes. we only have to look at the price gradient in voluntary carbon markets, $5 in Oaxaca, $100 in Brussels, to see that these are not simply unfair, these are unsustainable markets. And of course, create all sorts of risks for would-be ethical investors functioning in them. And that makes the governance issues of huge importance, as Jamie has pointed out. And although we mentally model this stuff sometimes on financial markets, actually things like bio credits, as well as bioenhanced carbon credits, can't just be thought of through a financial market regulatory lens. Issues to do with price floors, issues to do with trader certification, all of these things bring higher levels of integrity into the way some of these really sensitive markets, ultimately public interest markets, are going to function in the future. And if I was, and now I'll shoot myself and NatureFinance in the foot, Hiba, if I was looking at bio credit opportunities today, notwithstanding the brilliant work that Tim at Replanet and others are doing, I would want to ask really core questions about the way these markets are being governed before I step in and try to trade. Yeah, because even with the best will in the world, if these are poorly regulated markets or poorly governed markets, it's not going to play out at all well. And then lastly, sort of reinforcing the point that this may not be relevant to all, or indeed many, of the folks on the call today, but I know Martin has just come back from Nairobi, the Africa Climate Summit, and a number of my team were there. And the broader geopolitical concerns about way these markets are going to evolve, is going up the policy and political agenda. Yeah, and obviously that puts folks off and is rightly worrying, because one ends up, or is in danger of ending up, being sort of battered around by wider forces. But actually, below that big geopolitical conversation, I think there are many relatively risk-light opportunities to take. And I guess I would sort of inevitably finish, Hiba, on these points, which is there are many of us focused on work in that broader governance space. I think things like the Nature Investor Circle can bring more information about the way those developments are evolving, positively or otherwise, and create the space for folks who just want to get on with the investments to do so in a relatively risk-free sort of macro environment. Thank you.
Great, thank you, Simon. And I note that we're running out of time and we have quite a few questions in the Q&A. So I hope that you take the opportunity to provide your contact details. We'll get back to you with all of the answers to your questions. And I would also like to thank all of the presenters today. It was super interesting. And finally, we have provided here our email for you to contact us, because we would like to extend the invitation to everyone to join our Nature Investor Circle, and we will host a number of these events going forward. So thanks to everyone.